Hello, pals. Welcome to another week of Wavematics weekly forecast. I hope you had a good trading week last week, and we'll be having another great week full of tradable opportunities. Let's first have a look at USD card. We can see on the daily time frame, we've had an impulsive run of yellow wave 1, 2, 3, 4. Then wave 5 has begun. Wave 5 began with purple wave 1, which was a leading diagonal of 1, 2, 3, 4, 5. Then the market is done also with wave 2 of an A, B, C. And we can see that wave 2 had A, B, C, D, E for a triangle. Then now the impulsive wave 3 has started. We can see that we are now in blue wave 1. We've completed a 1, 2, 3, 4, 5. So let's see how we are going to trade this week. You can see that now the market is done with wave 1. So we are looking for a pullback for wave 2 before we go for wave 3. So when we come to the 1 hour time frame, the fifth wave was an ending diagonal of 1, 2, 3, 4, 5. So we've completed an ending diagonal and we are looking forward for the market pulling back to wave 2. So if we look at it, this is how we are planning of trading this week. The ending diagonal is now in a parallel channel. Then we cannot tell once it stays in the parallel channel that this is the end of the ending diagonal. So we will wait for a breakout from the channel. Then when we get that breakout, we will look at lower time frames and get these corrections for wave B. So here will be wave A. The correction we will get will be wave B. Then we will do a short-term sell for wave C before we start for the next impulsive move. And we can see that on March 8th there was a gap, which most of the time the market comes back to fill that gap. So we can see that the correction will coincide with filling this gap, and at the same time we can see that the 50% 61.8 Fibonacci level is at this area. And checking, there is divergence now in the market. Prices are moving higher, but the MACD is moving lower. Whenever price is moving higher but the oscillators are moving lower, it shows that there is weakness in price and price might reverse. So we are looking that based on the divergence, the Fibonacci levels and the gap, the market will fall and give us a wave 2 pullback before we go for wave C. Let's look at the next pair, which is USD Japanese yen. On Thursday, I did a video on USD Japanese yen from 1978. Those of us who did not get chance to watch that video, you can watch it and see where price has moved from 1978 to date. Even we had a trade from that video, which we took it with those with us on the Telegram channel because price was here that time. We were completing wave B, so we were looking of how to trade wave C. So last week we took the trade that we will wait, connected it with the trend line, that we will wait for price to break the trend line, then we buy for wave C. We took the trade somewhere around here and our stop loss was here. Then we have a very nice more than 2-hour trade. So we are looking at how are we trading it this week. We've had a nice impulsive wave down. 1, 2, 3, 4, 5, a zigzag correction of A, B, C. So now we are looking at the trend resuming again to the downwards. So we are looking for sell signals around this area, not necessarily because it's touching the parallel line. It's also coinciding with the 61.8 Fibonacci level at the same time is at the fourth wave of a lower degree. So now we wait for any selling signs. So we can also do as we did last week, join with the trend line here. So as soon as price reverse and break the trend line, we can join the sells for more downside. The next pair we are looking at is gold. We've seen that we've had a nice impulsive wave, 5-wave impulsive up down. 1, 2, 3, 4, 5 to complete yellow wave C. And when price reach this level, you can see that we are having a fifth cluster here with A equals to wave C, another cluster of fifths here. So when price reached here, we thought that okay, that was the end because we were anticipating the market to stop at our fifth cluster. It stopped, moved back. Then price moved again, but fortunately it stopped again at a cluster of fifths, and now it came down. So let's look at the lower time frame and see how we are going to trade this. On the 1 hour time frame, we can see that as price is going down, it's developing into a beautiful 5 wave impulsive move for green wave 1, 2, 3, 4, 5. So we are anticipating that this week we will be completing the green wave 5, for this being 1, 2, 3, 4, 5 to complete purple wave 1, then get a pullback for wave 2. So when the markets open and you get any sell signal, if you are selling, when you are selling, you should sell with care because very soon a corrective move will begin for purple wave 2. This is our primary count for gold, and we have an alternative count for gold. For our alternative count, we are seeing all these moves as a corrective move for wave 4. We are anticipating this is going to end in an expanding flat. We've done ABC for wave A, and we've done an ABC for wave 2, and wave C for expanding flat is usually 5 wave move. So we've done wave 1, 2, 3, 4, 5. We are anticipating that price moves lower to complete wave 5. So you can see that our primary count and our alternative count are all indicating that price is going to move down a little before we go upward. So as we are going upward, we will look at the price action that is going to develop to see whether we are going for wave 5 or a wave 2 pullback. So whatever be the case, as price is developing, I will update the community for us to know how we are trading it. Lastly, we are going to look at Bitcoin. For Bitcoin, we are in a very big corrective move. We've seen that after the impulsive wave of 1, 2, 3, 4, 5, price paused since July 2019, and we've been in a consolidation all this while. We've had purple with WX, W, X, Y, and we are anticipating wave Z, so XZ. So now price is here. So we've had our first wave down, which is W, because it's divided into 3 waves, 1, 2, 3. And we are anticipating price to give us a wave X and a wave down around 4,000 area before we will see the trend move upwards. So how we are going to trade this week is, as price is developing right now, when we look at the 1 hour time frame, we can see that as we are anticipating for wave X, on the 1 hour time frame for Bitcoin, this is how we are going to trade this. We've seen that now we are looking for, now we have green wave W, and we are looking for green wave X. So how we are going to trade this is, now we've seen that wave A of green wave X has developed, and we've gotten an A, B, C, D, E triangle for blue wave B, which we are anticipating for blue wave C to complete. So this is how we can trade this this week. So we can put our entry at where wave D ended, and that one too will mean price breaking out from the triangle resistance line here. So we can put our entry here and our stop loss below wave C, because when price reverse back below wave C, it shows that it has invalidated this triangle. And because it's a corrective move, we can lose for what, 2:1 or 2.5:1, which will not be bad for a corrective move. So now we'll go for 2.5:1 risk to reward ratio on this trade. This brings us to the end of this week market outlook, and please subscribe to our channel and click on the notification bell so you do not miss our trade setups for the week. You can also find our other media handles in the description column. Do join them and may the markets be with you.